Welcome there, Investorholics and friends and the casual viewers. Today we'll be taking a closer look at VBLD, which is a Vanguard Global Infrastructure Index ETF. This one might be interesting, I should say, for investors seeking exposure to a diversified portfolio of global infrastructure securities in sectors such as conventional electricity generation, railroads, pipelines. And these type of assets have a potential to generate regular income streams from reliably stable dividend payers. So the companies underlying are really good dividend payers. So you're going to get your regular distributions. So hang around, guys, and follow me down the Real Estate Investment Trust ETF rabbit hole once again. Thanks. Hey there, Investorholic. This is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at Crack the Sky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up. And also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks. Okay, so let's kick off with a look at the Vanguard Global Infrastructure Index ETF. Investment objective here, Vanguard Global Infrastructure Index ETF seeks to track the return of the FTSE Developed Core Infrastructure Index with net dividends reinvested in Australian dollars before considering fees, expenses and taxes and all those good stuff. So just a quick overview of the fund. The ETF provides low cost access to infrastructure securities listed in developed countries, so no emerging markets covered here. It offers investors diversified exposure to infrastructure sector, including transportation, energy, and telecommunications. The ETF is exposed to the fluctuating value of foreign currencies, obviously, because it's investing globally. So there will not be any hedging of foreign currencies to Australian dollars in this one, so it's unhedged. So the Y factor, competitive long-term performance. So Vanguard Investments approach provides investors with an efficient way to capture long-term market performance. Diversification, which is what we kind of like here. The fund invests in diversified portfolio securities, which means the fund is less exposed to performance fluctuations of individual securities. Following up here, number 3. Low cost of investing. The fund has low ongoing fees as Vanguard strives to minimize the costs of managing and operating the fund. And also another thing to think about when we're investing in ETFs is liquidity, so we can get in and out of ETFs quite rapidly. As long as the market's open, you can buy and sell, which is a little bit different to a managed fund where you have to submit your letter and it takes a day or whatever before you can get in or out of those things. But the ETFs, it's listed on exchange, you can get in and out quite rapidly. Okay, let's have a look at the dollars and cents here. When I put this slide together, we had a net asset value of $53.39, trading just above that at $53.52. Market cap was around 125 million. Management cost is a little bit higher than you'd like at 0.47, but this is an international fund, so you've got to take those type of additional expenses into account here. So you'll be paid a dividend quarterly, January, February, July, October, pretty standard for these type of REITs. Yields about 3.65%, jumps around obviously a bit with the share price. This one's relatively new, was listed in late October 2018, so sort of 2 and a bit years we've been running. So as I say, it's the performance hasn't been the best, but we'll have a quick look at that later on the next slide. So the unlisted fund has obviously had a bit longer history. So it was set up in 2007, and it's been performing reasonably well. I'd have to go back and double check that. Whether it's still running at 12%, I doubt that. Considering what we've been through in the last 12 months. So take that one with a grain of salt. So this ETF could be appropriate for investors seeking exposure to a diversified portfolio of global infrastructure securities that have the potential to generate regular income, so and relatively stable dividends. So I mean, really, that's why I'm looking at ETFs, these type of ETFs in general, looking at income. Obviously, with all these, I'm going to say the same damn thing. Income has gone down in the last 12 months, just sheer fact of the unknown. But hopefully, these type of infrastructure ETFs, the income shouldn't have gone down too much. It should be relatively stable. So that's definitely one thing to have a look at if you're doing your research. Also have a look at IFRA and IGF. There are a couple of other alternatives that are similar to this, but different to the other four that we're going to talk about. So it just gives some more optionality to have a bit more, do some more research and find out some more info. Okay, moving along, let's have a look at the top 10 holdings. Majority of North America, US, Canada for the top 10 here. NextEra Energy, Union Pacific, American Tower, Canadian Rail, CSX, whoever they are, Enbridge, Castle, Norfolk Southern Corp, Duke Energy, and Southern Co. So, pipelines, American Tower, that is all your 4G and probably 5G towers in America, and they own some the towers and bits and pieces throughout Central South America as well. So, diversified, but between infrastructure classes there. So performance since we have listed, you're looking at it was about 4.8% per year. I mean, which isn't shooting the lights out, but over the long term, it's you'll definitely rack up the gains anyway. So plus your dividends and all the rest of it. So not shooting the lights out, but it's solid. I should say solid. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.